What's up, YouTube? American Forex Online. We sitting here giving you the best content for free, 24/7. Showing you how to work these weekly candles as a marketeer. I always want to start my videos by letting you know that trading is not what we're doing, and this channel will not be showing you how to trade on in no form or fashion. What I will be doing is explaining maybe the difference between marketeering and trading, and I will be providing you skills to marketeer. Because one of the problems is that a lot of uh, our real traders out there, so to speak, and some of them are marketeers and they don't know it, but simply because if you haven't been successful for 3 to 5 years trading stock, bonds, futures, and everything else, then you're not a trader. You're learning to be a trader, but you just don't become a trader day one because you got an account and you went live. That doesn't make you a trader. That makes you someone that's enthused about the skill and doing your due diligence trying to get to be a trader. But 90% or 95% of those that try to uh, identify themselves as a trader, and they do end up identifying themselves as a trader. You see them on the 5 minute, the 2 minute, the 1 minute, the hour. They're looking at this pair, that pair. They fail. They're going to fail 95% of the time. With me in my course, becoming a marketeer is almost absolute opposite. We are 97% successful as we start, simply because we are not trading. We are marketeering, and what a marketeer is someone that has the ability to go in the market. We don't buy and sell it. We either sell or buy, but we don't never do both. Using a different skill set, we don't use all the time frames as a trader does. We only use 3 time frames, which is the monthly, the weekly, and the daily. And then there's some training on some other time frames, but we, as far as using them as a platform of study, or there's no patterns or any of that. We don't get into no patterns, so we're not looking for no patterns or anything like that. So the description of what we're doing is totally different. As a marketeer, you don't need to know any of that. I don't need to know what Donald Trump is doing, or we don't need to watch the news. We don't need to know what year it is. We don't need to know what quarter it is. We don't need to know what the COT reports are. We don't have to know any of that stuff as a marketeer, because we're not participating in the arena of trading. We're marketeering, and I'm going to explain more about what exactly that is. But to get back to the study, as you see here, we're on the weekly. Now, normally I tell my students this is kind of like one of the only times that you trade during the week. You go in and maybe harness your skills, and you may learn a couple things and start to just educate yourself on trading once you've placed a bid on in the weekly, monthly, or daily. But these are the only time frames you're working with. And one of the first things we learn is the anatomy of a candle and how it actually is formed. I'm not going to go over it here simply because I'm only going to make this video about 5 minutes. But for the most part, I'm going to give you a brief description right here showing you how these candles will form. And you can also get that idea and see where we're going with it, as far as how we use this to marketeer and receive funds for marketeering. A candle is formed. Let's say right here, for instance. Once this candle, and let's say all of these three was gone, there's a little nice function that I can go back and do it the right way, but I'm not. I'm gonna just talk you through it. I put a line right here simply because let me go to the. You may have to bear with me a little bit. The monthly candle, and I just want to know which way is the monthly candle going. What is the bias of the monthly candle? And I ain't gonna use bias. I don't like that. I'm gonna use direction because we don't have to have a bias in marketeering. We just need to have a direction, and there is a big difference. In trading, you need to know the bias simply because sometimes the bias may change well, it's going to change daily, hourly, mentally. It's going to change a lot. But uh, in marketeering, we don't have to worry about a bias. We just want to know the direction. I can look at these last two green candles right here, and what my synopsis would be is that the direction is up. And some things up here, some other stuff going on, but right now, it's kind of simple. The red candles tend to flourish down, and the green candles flourish in the direction of up. So we say monthly is up. Okay, so we're looking and expecting, and we're going to marketeer towards a. Well, we have to realize that we're already in a monthly bias that is in an up direction. So I come to the weekly, and on the weekly candle, the candle really, like right now, this red candle wants to go up because the way that candles, that's the direction it is. As you can see, those two green monthly candles kind of was the outlook for this, all these weekly green candles. One that was pretty much, I don't call that, that's not a direction right there. That's kind of letting it's either one. You have pressure on the top, you have pressure on the bottom. It's 50-50. So these green ones is more, um, down than up that week. But for the most part, there's pressure on both sides. So it's like, it's not really giving you a direction. These other ones clearly letting you know is up. Now this one right here, as you can see, is where we're at now. We would have been looking at this before 5 o'clock, and we'd have been saying, whoa, look at all this pressure. Because when it first started the week, last week, it went down, and it looked like, hey, it was going down. This looked like we're in a down market. And then by Wednesday, Thursday, Friday, obviously it pushed up and it left that situation looking like that. So now on the weekly candle, and once we do this, we are done for the week. We want to say it's in the up direction, being that it's going to be moving up in candlestick work. That means the bottom of the candle must be formed first. So you see with this wick right here, it's like halfway this candle, and then it went up, and then you see where this wick is halfway on this candle, and then it went up, and then you see where this wick is some of in this candle, and then it went up, and see we had a good reversal. This wick went into the last two candles, but then it pushed up and said, hey, I'm just a wick. And that's what wicks do. Wicks are rundowns. The bottom wick is, basically the rundown for the wick on the previous week. So when I come over here to the days, I should be looking for 1 or 2 days of this thing coming down to create a wick. So when it comes back up and past this point, it'll have a wick there. And it already done started. As you can see, this little red area right here, it had shot down here and went back up. But I'm going to just take that as a manipulation. I put a buy limit right there at 78,500. Nice limit, round number, just to hope that if it comes down and hit my buy limit and goes up for the rest of the, it's going to be 3 or 4 days of going up. So hopefully the rest of the day, it's going to fake a couple people out. Maybe they'll do some buys, but I'm thinking by tomorrow it's going to come back down and trip my buy order or my limit. I'm sorry, my buy limit, and put me in the trade. And after I'm in the trade, it's kind of like I don't have to do anything else. Clear some of this stuff out. And that's about it. I'm gonna do one more on another video because I was rambling a little bit earlier about the difference between my channel and most of the other trading channels you're going to be going to. This is the number one and only marketeering research from Forex that's online right now. And I'm the only one using this verbiage. I'm the only one using some of this terminology. So I'll be able to discuss what I'll need to discuss. I'm clearly letting you know the boundaries in which where I see the difference between trading and or marketeering. And what we do here is marketeer. And as a marketeer, it is reverse of the statistics for trading. If you start out trying to be a trader, 95, 97%, 99% of you guys are going to fail. It's just what the last 20 years have shown us, or more probably. But as a marketeer, being able to find and devise a way in which where I've created, you're able to come in, marketeer, and you may not get as much as the traders do, but I guarantee you'll be able to at least flip your accounts, whatever it may be. Now, listen to what I said. In marketeering, you're going to be able to at least flip your accounts. And it's going to be, that's kind of what we do in marketeering. We're not about a get rich scheme, but you'll find out that you may be able to get rich quick. But for the most part, if you start with 300, our goal is to make it 6 as a marketeer. If you start with 5,000, your goal will be to make it 10, and so on and so forth. If you start out with 5, turn a 5 to a 10 is a double up. So that's what we're doing, and that's how we marketeer. In trading, you go for, I don't know, guys start with a $300 account, and they in trading, their goal is the Lamb truck, the Lamborghini truck, the spaceship engine in it. So that's what traders do. Some traders can get that and achieve that. Most don't, but that's what happens, and those are your parameters and your language and things that you're going to identify with in your behaviors as a trader. Ours are 1,000% not that. There's only one thing as a marketeer that we do, and I'm about to cut this video short, and that is flip your account. That's it. This is a more structured body of work that we do, and is not all over the place as some of the trading may take you, where you have to, as I said before. But we'll be talking about it a little later. Thank you so much for joining me. This is one of the first videos drop, American Forex Online.